Hi traders, good morning, good afternoon, good evening. I hope you're all learning from these videos. In today's session, we are going to talk about a BTST strategy on Nifty options. BTST stands for buy today and sell tomorrow. So before that, let's have a look at our disclaimer. It's always advised to do your own research and understand the concept before executing it in the market, because it's your money and you are responsible for your money. You have to be very careful, follow the rules, guidelines, and always try to paper trade before taking any actual trade. Okay, so today's strategy we are going to cover double straddle. Double straddle we have learned in the past. If you have remember my videos on option working strategy for part 1 and part 2, we have covered double straddle and double straddle, triple straddle, along with that hedging of call and buy and buying a put. Both we have learned. So in this we are going to use the same strategy, but this strategy works well on Nifty only. Do not try it on Bank Nifty because Bank Nifty is very volatile and Nifty is much stable and higher liquidity. So this strategy has to be executed by 2:35. As you understand, market has timings. So most volatile periods are like from 9:15 to 9:40 in the morning, and then we have another movement coming at around 1 o'clock. Then there is a third movement coming at around 2:20 to 2:30. So wait for these movements to complete. By 2:35 it will be mostly stable. You'll get to know that market is stable, and then you go for this straddle, create a double straddle at the money and above at the money, and sell both the straddles at the same time. Do not have the slippages there. Try to keep everything ready before execution, and the moment this time is gone, then you try to place the orders immediately. Or you can use a basket order. You can add all these things to basket and place the order immediately. And this has to be closed next day morning by 10 a.m. Okay, so let me just take you to the chart options. Let's go to the NSE chain. So if you see, this is 5th December NSE chain for Nifty. So here we are going to choose 12,050, premium is 70 and 60, 12,100, 47 and 80. Assume that the prices are same at 2:35 when we are executing this strategy. So we execute these two, and if we look at how it is going to see, I have mapped this on offshore define edge. You can see that we have a range from about 11,944 to 12,206. So let's understand this. So this straddle range is 11,944 minus 12,206. So we have a 262 point range. So Nifty in a day moves approximately about 150 maximum. Okay, there will be very rare days when it moves more than 200 points. So we are creating a range of about 262 points. If any day you find that this range is not greater than 150, then what you can do is you can add one more straddle, which is, you can choose the straddle which is little above or below the market, which is 12,000. So you're choosing it 12,000, 12,050 and 12,100. Three straddles you're choosing, and so that your range becomes little bit bigger. So here we are playing the time decay. As the market moves up down in the volatility period next day morning, by 10 o'clock you will get to know what is the profit you're making. Even if you're like in minimum loss, you can close the position and try the next day, but do not be adamant to hold the position because it is not hedged. If any violent move happens, if you want to hold it, then try to hedge it with buying a put or buying a call on either sides, which I have taught you already in the previous video. So this is how you make it, and what are the rules to be followed? Let's understand that. So you have to follow the time, execute only after 2:35 p.m. Usually you will have a range greater than 150 points, like I have explained. If the premiums are too low, that means there is a lot of imbalance, then I would suggest not to apply this strategy. Avoid it. Try to play with some other strategy, maybe an iron condor or something. Then you have to always see that it is always 150 you're giving a range to the market. If not, add one more straddle to it. Then exit next day morning by 10 a.m. So give the market time. Let me explain you how this works on the chart itself. So this is a Nifty chart. Okay, so let's look at the previous day. So this is the time around 240. Okay, 235. 235. You have written a straddle, double straddle, and what is the price here? 12,122, 121. Okay, then next day morning by 10 o'clock. So this is the price, 12,092. Let's calculate. 12,121 minus 12,092. So market has moved about 29 points only from this day to this day. So what will happen to the premiums? Premium will decay because it has gone up, then it has gone down. So you have to understand this, it has gone up, gone down. So the premiums will decay, and then you will get the money which is been made on this. So try with one lot initially. Once you get confident and if you see the results, try to log everything every day, that this is the price which I have bought and this is the price I have executed, so that it becomes a journal for you, and that becomes a learning process for you for the future. So always try to journal your trades, what time you are taking exit, what time you are entering, and how much profit you made, and which are the days you made loss, and try to study the charts like that. So it's a very simple strategy. This is for working people who can just go at 2:30 and place this order, and next day morning by 10 o'clock you close this. If you make money, decent enough. So without putting much of an effort, if you're making 500 to 600 or even 1000 rupees or 2000 rupees, it is much better. So that is more than the interest what you get from the bank's savings account. So try this strategy. I hope you like my videos, and guys, please do subscribe to my channel and click on the bell notification so that you don't miss any new updates which are coming in. And thank you so much for watching this video, and have a great day.